What's up, YouTube family? So today we're going to be talking about the #1 strategy on catching retracements in these markets. What is a retracement? It's basically after a huge expansion in price will then revert back into the recent created range, right? So from that huge expansion, they're going to retrace back. What are they retracing back into? They're looking for inefficiencies to fill, right? These inefficiencies are also areas where they leave orders in, right? Also liquidity, you would say, right? These fair value gaps. So let's look at some live trades that I actually posted in my Facebook group. And I'll show you guys the after. Like I told you guys before, I post before and after. It's for people, for learning purposes, right? Not signals, right? Because if you lose your money, I am not responsible for that, right? They are just my trade ideas, right? If I take it and I lose money, that's fine with me. If you take it and you lose money, that's on you. All right, so let's look at these setups that I posted within these group and within my group, and we will see the after on TradingView, right? So catching retracements, let's look at this right here. This was GBPJPY, right? You guys see the sell level was 152.753. What do we see here? We see a fair value gap in price. That is an imbalance. That is an inefficiency in price that they was going to fill and revert back to the downtrend that we was already in, right? It's cool and all that people capitalize on this buy, right? But overall, the real movement was a sell, right? And what I like to look for imbalances and fair value gaps, how you would say, you could say it either way, right? I like to look for liquidity, right? So what do we see right here? We saw a high, right? And then we saw right here a trend line, right? So either way, I was waiting for this trend line to get attacked into this imbalance, right? So let's look onto the GBPJPY, right? And let's look at it, GBPJPY on the 4-hour. Right? You guys see the after effect right here. What happened, right? Prices came and took out previous day high, right? And sold off, right? So how would you trade these fair value gaps, these retracements in price? Basically, after a huge expansion in price, you will see a gap, right? From the wick below to the wick above, right? You would put a line, right? And then how would you find the 50%? For some reason, the 50%, the algorithm just loves it. I can't explain why, but ICT can. I learned it from him, right? So basically, the 50% of your fib will give you the midpoint of the fair value gap that will be filled, right? 50% right there. So you guys see that live. So you don't say that, oh, I'm making this up in this hindsight, right? So let's look at another trade, right? This was GBPUSD. Let's look at GBPUSD. This was posted what, September 2nd. Today is September 15th. All right, so let's look at that again. Another way to catch up on retracements in price. GBPUSD. You guys see that the market came and did what? Sold right there. Fair value gap, right? Right at the midpoint, right? Right at the midpoint. After a huge run down in price, right? They usually leave a what? They leave a gap in price, right? What's above here? Resistance, 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 right? Right? Sell resistance. Once resistance break, buy stops hit, and then we eat them up like it's some what, Girl Scout cookies, yum, you know what I'm saying? Right? So that's GBPUSD. So another way, so that's what, 2 for 2, right? 2 for 2, right? So now let's look at another example, right, that I posted in my group, AUDJPY, and that shit is still falling like it's nobody's business, right? Posted September 3rd, right? So now let's look at AUDJPY, AUDJPY, right? AUDJPY, right? And it's still selling off, right? For people who may ask, right, I'm not really a swinger, so I've been got out this fucking trade, bro. Like, I've been the fuck out. Like, motherfuckers who swinging this, good for them, right? But I've been out, right? So basically, what can we see on the daily? It was a daily fair value gap, right? Daily fair value gap after a huge expansion down in price. What do we see here? Liquidity. That's one of my huge confluences when I'm looking into trading imbalances. I'm looking for liquidity, right? Like I told you in my first video, the consolidation video, right? I told people that if I'm looking for a higher time frame support or resistance, right? I'm not looking for key levels that the market's touched before. I'm looking for inefficiencies in price, right? I'm looking for where the orders was left, right? Orders are left in fair value gaps, right? Orders are left in order blocks, right? So you guys can see how when price broke above this resistance, right, triggered buy stops and then sold off, right? People's accounts are blown right now, and a couple probably hung themselves, right? So that's AUDJPY. Let's see, do we have one more example? Yes, we have CADCHF, another imbalance in price, right? So let's look at CADCHF. CADCHF, right? So you guys see here that we traded the 4-hour imbalance, right? So I've been got out this motherfucking trade, right? I've been got out this shit because I hate when price always comes to my area for no apparent reason. Like, just sell and hit my fucking TP, right? So, and you can see price is doing what price does, bullshit, right? Basically, what have they done? These previous lows right here, they basically ran below it and reversed. That's what price loves to do, right? And you can trade like this without having a point of interest, right? You can just watch on smaller time frames and see what prices do. Like, I know I'm off topic real quick, but let me show you guys real quick what prices do on smaller time frames, right? Look at the 1 minute. Look what they do. Right? You don't even need a point of interest. Just look at what they do. Right? Probably you can see a divergence in price or something. Right? So basically you guys see that we have this previous low right here. They run down, run up, break of structure, BOS. Look what we have here, order block. Right? Only 1 minute. I didn't even have to try to see what was going on, but that's simply what they've done. Right? When they run below lows, just look on the smaller time frames, look for a break of structure, BOS, right? Retracement, right? Order block right there, last down candle before the up move, right? So that was a little bit off of topic, but let's go back to, yeah, like I was talking about before. So we're gonna learn how to trade fair value gaps in this video, right? So basically how you would trade a fair value gap is very, very simple. After a huge rundown in price or a run up, what you're going to do, right? The wicks from the wicks above right here, right? This wick above and this wick below, right? The gap in between. You basically place your horizontal ray, right? Horizontal ray, and then you draw the 50% with your fib from the top line to the bottom line, and you get your entry. Now for stop loss, usually I like to put my stop loss above the wick high, right? Even for the daily as well. If the daily is type huge, I would use a 25 pip risk no matter what, right? Because I think on GU I used a 25 pip risk, and GJ I used a 25 pip risk, right? So basically that's all there is to imbalances and fair value gaps, right? It's just a huge run down in price or a huge run up, and all you're doing is capitalizing. First of all, you want to look for liquidity, right? Look at these equal highs right here. Equal highs. That was perfect confluence, right? With all these trades, look at how they had liquidity as a confluence, right? CADCHF, equal highs, right? Had liquidity as a confluence. Let's go again. AUDJPY, right? Had liquidity as a confluence. Liquidity right there, right? Gap, fair value gap right there, right? Let's go again. What was the other one? GBPJPY. Look at it. We had liquidity as a confluence. Previous day high, right? Trend line liquidity, right? Buy stops. Everybody's buy stops activated. Boom. Look at that. Account blown. Right? So you guys see how I use these huge run up and run downs in price as, look, we have another one right here too. I was waiting to capitalize on this. What do we have here? Liquidity. We have a trend line right here. We have a trend line, some type of fucking funky shit right here, right? So yeah, I was waiting to capitalize on this, and then we have what's here, right? We have this consolidation before expansion, so we have this order block right here too, right? So I know I got a little bit off topic, but when I see stuff, I just like to talk about it, right? Even if it's not related, but I just like to talk about it, right? So now let's go to EURUSD real quick. EURUSD. Let's go to some live shit, right? So EURUSD. So if we look on the daily on EURUSD, right? Basically, this is how I was going to start the video, but I changed my mind, right? So as I was saying before, a retracement is when price moves inside the recent created price range. Right? What does it mean? It indicates the market maker's willingness to reprice to levels not inefficiently traded for fair value. Right? So if we look all around these price points, right? We're looking for huge rundowns and run-ups in price, right? And within those run-ups and rundowns, we're looking for the gaps in price, right? And we're also looking for liquidity that sits above or below price. Right, and not all the time price will come to your imbalance. They could just take off and later on, like a week later, and come back and hit it. Right, it's not right away. Right, so you guys can see here again, we have sell stops here. Sell stops. What do we have here? This huge run up in price. There's a fair value gap. What do? They fill it. Right. Then we go on smaller time frames. There was a 4-hour order block that they filled. So for people thinking that, right? So how would I really set this up if I wanted to, for instance, right? If we was supposed to take a long on this, right? A long position, right? 50% here, right? Oh my gosh, 50% right there. I'll put my stop loss below this wick. All right, how much pips would that be? All right, that's too fucking much anyway. So like I said, I'll do a standard, 25 pips right here. A standard 25 pips right there, right? And for huge levels like that, I don't want to use freaking 30 pin. You guys can see that my stop would have not been hit, right? And what would we I hit when that happens, when I get tongue tied, right? So what would we be targeting when we when this imbalance gets filled? Basically this next imbalance right here too, you will want to take profits, right? So basically that's how I would trade a fair value gap in price, right? Also, not every fair value gap is a fair value gap. Like I told you before, a key confluence to look for is for liquidity. Look at this consolidation before expansion. People bought the breakout and then they sold off, right? Right, we have liquidity here, then they sold. People sell stops was triggered. Look, then they bought, right? It's just certain things that you need as confluence in order for that fair value gap to work. You don't just place at any fair value gaps. Like look at here, right? Price just completely just avoided it, right? Because why? We have relative equal highs here that they wanted to ran, right? And they sold off. So you got to understand the difference between a liquidity void and a fair value gap, right? And as I said before, good confluence is looking for liquidity, right? Look at this fair value gap right here, right? If we was to go on smaller time frames, maybe we can reduce this area into a smaller. Let's go to the 4 hour, because the 4 hours, either the 4 hour daily I'm not using anything else. All right, so if we go to the 4 hour and we look within this area right here, right, you guys can see that we have what? Ooh, the imbalance, right? This is the imbalance from the wick above, from the wick below and the wick above, right? Just like that. 50% in the middle, right? You don't really need a Fibonacci. You can just visualize the 50%, right? So 50% right here, stop loss would be right here. And let's see this risk to reward. Will we be targeting? What would we be targeting? Let's go for a long, right? So from the 50%, maybe we can target the previous day high up here, right? Previous day high, or the open of this bearish order block, right? So we would be risking what? 34 pips. Well, like I said before, I like to risk 25. That's my standard, right? So you guys can see that we would have been in profit nicely. Oh, remove that. All right, so we want to send this to the back. Visual order sent to the back. All right, so you guys can see that would have been a nice target, right? But you guys see how we have confluence, right? We have this previous day low. Price does what? Drives below, collects sell stops, and then reverses, right? So that was just in that little box right there, right? For a little play. Like I say, I like to see my look for my gaps, right, on the daily, and then with the 4 hour I like to then switch to then run down, right? Like you guys can see here what happened here. We have this 4 hour expansion in price, right? What do we have here? Equal lows, sell stops. What do? They come down, they run down in price, they fill it, and then they run down some more, right? So it's not all the time that these fair value gaps will actually, right, they work most of the time, right? Don't get me wrong, they work most of the time, but if you're looking for a certain amount of pips, you're not always going to get it. But trust me, these things work. As I just showed you the examples, live examples before, right? So basically, we go on the daily. Like I said before, I like to look on the daily for my points of interest, right? Points of interest. So if we go on the daily, right? Find. Here's a good step, right? Find the fair value gap on the daily, then go to the 4 hour and try to narrow it down. Then go to the 1 hour, try to narrow it down, right? As simple as that. But sometimes you won't always have to need to do that. As for example, AUDJPY, I did not have to go into the 4 hour to look for anything. Price just respected the daily fair value zone and fell, right? So you guys can see here we have buy stops right here, right? We have highs, previous days highs, yeah, previous week's highs. What this price does, it runs above, fills it, and drops, right? So you guys can see this is like the ultimate retrace strategy. People thinking that it's a breakout to the upside when it's not, when price is simply just what? Repricing for fair value, right? Let's look here again. We have this huge gap in price right here. What this price does, consolidate, expands, people buy the breakout and then they sell. Oh my gosh, this is just terrible, right? People need to realize and they need to be aware of these fair value gaps in price, right? So let's not just move too crazy all over the screen. All right, now let's just follow this trail, right? So what do we see here? We see this run up in price, right? We zoom in. What do we see? We see previous days highs and lows. What do people have below this low? Sell stops. You see price came, filled the gap, and ran up, right? As simple as that. Then we have this rundown in price, right? Right, we have this rundown in price. We have this another rundown in price. As you can see for this one, price did not really fill this one in, right? So you can take a loss from trading fair value gaps, right? But as you can see right here, if you have liquidity as a confluence, whenever price consolidates below your POI or above your POI, that is strong, or leaves liquidity below or above, that is strong confluence to want to trade that fair value gap. As for instance, this would have been anticipation of selling this, right? Because we see equal highs here, buy stops, right? So that would have been anticipation, but we did not get it, right? We got it here, right? We have previous days. We have a high here, right? And then what this price does, consolidate, expands, collects to capitalize on the buy stops above this high, and then sells off, right? You guys can see here again, we have a fair value gap. Price doesn't always have to come down to it, but we have equal lows. Price did not come down to it at all, right? We have this fair value gap in here as well, right? Price later on came to it, but you guys see we took a loss, right? I took a loss here too when this drop happened. I was willing to buy here, but I took a loss, right? What else do we see here? We see this fair value gap in price here. What do we see here? Equal lows, relative equal lows. Look at this low, look at this low, how they almost equalize. Price does what? Sells into the imbalance and then buys off, taking out the previous day high right here, right? What's above here? Buy stops, right? And sells off, right? So we can look here again. Let's look at now. Let's look at current day price, right? You guys can see currently that we have this trend line here. What's below this trend line? We have a fair value gap, right? So you can see people buying this trend line. We have sell stops here, right? We have a liquidity void in above here that price wants to fill, right? So this is what we're working with now currently with current day prices, right? So we have liquidity, we have an imbalance, we need a drop, right? And then we need people to chase this sell so we can buy. As simple as that. If we wanted to, like I said before, how I trade these fair value gaps, basically all I do is from the 50%, right? And we can go into smaller time frames and try to what is that? A nice 21 pips. Not bad. I'll use that. Right, 21 pips, and we can target what these highs here, right? Or we can try to target the open of this candle, right? Usually with these opens, you will see order blocks there, right? So basically, trading retracements, right? You want to look for liquidity above or below the recent created price range after the expansion, right? You want to look for a high, a low, above or below. You want to look for equal lows, equal highs, right? You want to look for trend lines. You basically need liquidity as confluence for that imbalance to work, right? Or else you would just be trading a void in price, right? So as simple as that, guys. I hope you guys learned something from this video, and I'll catch you on the next video on reversals.